Hi, in this video I'm going to talk about the coronavirus and its impact on financial markets. So make sure to stick around as we are starting right now. If there is something that doesn't need any introduction now, it is the coronavirus, aka COVID-19. It has claimed the lives of over 15,000 people so far, with several hundreds affected, and the worst thing is that it's not over yet. The world is at standstill, and our leaders and healthcare professionals are working day and night to find a solution to stop this micro but macro enemy. In this millennium, we witnessed one of the worst financial crises that shook the world's economy, and we also witnessed health emergencies like SARS, MERS, and the Ebola virus. But this time, it's different. COVID-19 is a health emergency that can push the world into an economic disaster, and we are already seeing its impact. The tourism industry currently accounts for 10% of global GDP, and according to the World Travel and Tourism Council, the COVID-19 pandemic could cut 50 million jobs worldwide just in the travel and tourism industry. To put things into perspective, around 850,000 people travel each month from Europe to the United States, and the recent travel restrictions translates to a monthly loss of $3.4 billion to the US economy. The global financial system is definitely in a state of panic, as evident from the recent stock market performance worldwide. Since the COVID-19 outbreak, the S&P 500 saw a year-to-date decline of 30% as of March 2020, while the Dow Jones saw a decline of 34%. The Asian markets and the European markets were no different. The reason why COVID-19 can lead us to further economic distress is due to China's role in the world's economy. COVID-19 originated from China, and the impact it had on China is devastating. China today is a global power, and it is the world's second largest economy. China's contribution to the world GDP grew from 7.29% in 2008 to 19.24% in 2019. This clearly shows how much more we are dependent on China. COVID-19 did not stop there. It spread to other countries, including many countries in Europe and America. What COVID-19 has in store for America is yet to be unfolded, but some signs are already popping up, and they aren't good. A public health emergency was declared in the US on 21st January 2020 after the first case in the country was confirmed. COVID-19 is expected to affect a number of US-based companies with operations in China and other coronavirus-affected countries. The combination of trip cancellations and country-specific restrictions on international flights has had a staggering impact on the $880 billion global airline industry. Nearly all countries have some type of travel advisory in place, with many encouraging people to avoid non-essential travel. China saw a 71% drop in flights during the Lunar Year season when compared to the same period in 2019. Due to travel restrictions, the economic impact on airlines has been immense. Nearly 40% of flights impacted by the European travel bans are US-based, such as Delta and United Airlines. The impact is evident as these companies have lost a ton of market value in the stock market, and their prices have been falling since. US-based aircraft manufacturer Boeing has announced that fall in demand from airlines would affect new plane deliveries. Boeing had its own problems since the 737 MAX crash. The COVID-19 outbreak is a nail in the coffin for Boeing, as it seeks $60 billion in federal assistance to avoid bankruptcy. All other major US airlines, including American, Delta, United, and Southwest, are following the trend of falling stock prices. Delta and American saw a year-to-date decline of 63% and 62%, while United and Southwest saw a year-to-date decline of 72% and 42% in stock prices. The US hotel industry is adversely affected by the coronavirus outbreak. Since travel is restricted, there has been a surge in hotel booking cancellations. This leads to increase in vacancy rates and a steep decline in revenue. Together, China and the US produces almost 38% of goods consumed in the world, with China contributing 20%. They don't just produce, but they also consume. What happens if they don't produce or consume needs no explanation. Consumerism will come to a halt and the world will witness shortages in everything, starting from essentials to non-essentials. World trade will collapse, pushing every nation and economy to brink of a collapse. 2 quarters of consecutive negative growth is technically called a recession, and at this time, a recession is not a possibility but a certainty. In spite of all these chaos, our healthcare workers are tirelessly working to combat COVID-19, which is putting our health and wealth at jeopardy. Once things go back to normal, the stock market should bounce back vigorously, claiming new highs. So stay calm and don't panic. Practice good hygiene and social distancing, and let's come out of this crisis as one nation. Until we see next time, thanks for watching. Bye.